Oversight Committee. And we're continuing our work this morning, looking at updates and reports. You know, frequently we put reports on the shelf, but today we're actually diving into what we're getting, and it's really important. So thank you for being here. Why don't you introduce yourself, Jill, again, and talk about what you're gaining, if anything, from our accountable care organization is going to funk.
Thank you. I am Jill Mazza Olson. I am the State Medicaid and Health Systems Reform. Guys, I don't remember. Medicaid and Health Systems Director. I got it. For the Agency of Human Services. So I think the reason I'm a little thrown off is because so I'm not a subject matter expert here, but Alicia Cooper, our Director of Managed Care Operations, one never wants to speak instead of her because she is such an incredible state resource and expert, but she was not able to be here today. So I'm going to give you the high level as I understand it, but I think if you need to go deep, we're definitely going to need to bring in our subject matter expert because I cannot pretend to know as much as she does. Okay, so as I understand it, the purpose of this report was to think about the fact that that One Care Vermont and our accountable care organization and all payer model structure is going away, and are there things from that structure that that might be possible and desirable to continue in? Is there some way to continue some of those concepts in a world that doesn't include the accountable care organization? So that's what I think we're doing here, or what the question was. And so first of all, at a high level, I think the thing to understand about what's being lost by not having that framework is that it allowed for unique legal authority that doesn't typically exist. And that along with contracting expertise and complex financial management transaction work. So they have all that capacity, but they have this unique legal authority to create payment arrangements on behalf of multiple payers for multiple providers. It's just not normally possible legally to do that level of coordination as good as it sounds. So we actually needed the ACO all payer model framework to make that possible, and that is going away. So that's just sort of the big picture of what we had, and as I said, combined with they have a lot of contracting expertise and they have the complex financial transactions. So there's sort of three large buckets that that the team looked at. One is payment reform. So especially these fixed payment models. So there are strategies that we can put in place to create fixed payment models. You're seeing that now. There's DEVA is doing Medicaid, hospital global budget Medicaid contracts, but they're doing them one provider at a time, and it's only for that one payer. So that's the difference. So there are ways to have these models. There might even be ways to convince payers to align, but there isn't a way to sort of require one thing, one full agreement. So there are ways to do fixed payment models, but there's not a way to necessarily get everybody into alignment. So that's sort of one big bucket, is how we pay and whether we move to these some of these fixed models, because sometimes they are a useful way to pay. The second piece is quality reporting, improvement, and accountability. So first of all, the model alleviated providers from some particular federal requirements. So there was that. But more, I think one of the things that I've been talking about quality for a long time in my career, and misaligned measures, metrics that are different for one payer from another. It is really stressful for everybody in the system to be asked to measure different things or same things in different ways. And so the ability to align our measurement and how we think about how to measure success was an important part of the ACO. It is, I think, there's some potential for doing that, but again, there's not, without that legal structure, there is not the same kind of data aggregation that we had, and some of the sharing. So I really do think this is something that's being lost, but this is a capacity. This alignment is an important capacity. And then the third thing is data aggregation. So OneCare aggregate, I'm reading now from this report, aggregates, validates, and securely warehouses financial utilization, medical risk, and social risk data from all payers. So that's a lot of information, and allowed for analytics. And I think providers have really appreciated those analytics. So the ACO's legal structure enabled that. And it sounds to me like this is one that actually is going to be pretty hard it was important, but a lot of barriers to doing so in a non-ACO APM environment. So there may be some longer term options, but it's definitely more complex.
Okay, thank you.
That's about as much as I
understand.
Just don't go deep.
I know Alicia has always been terrific.
Yeah, she is terrific.
Data, so we will, at some point, we'll have her come in to committee, whether our standing committees or this committee.
Thank you.
Thank you.
Thanks very much.
Thanks very much. And let Alicia know I bet you were here, but we want to hear her later.
I think she anticipated that. But I will tell her.
All right, so Kai Sampson is here, DFR.
Yeah, we're right back on schedule, Madam Chair.
Yeah.
See what I can do about that.
And we had a break.
Hello,
How are you?
good. How are you?
Terrific. And so we've been listening to folks. We may have some questions, but why don't you introduce yourself for the record? And then we'd like to hear the report from Act 68 already.
Yeah,
Yeah.
thank you. Kai Sampson, Commissioner of DFR. I just want to point out Joe Valenti, our new Director of Policy at DFR.
Okay.
He's probably going to be here a lot in the coming months.
Okay.
And, with that, I do want to say that, as I shared with you in the hallway recently, Senator Lyons, if I look at what we do at DFR, which is securities, banking, insurance, and the captive industry, there's zero doubt that healthcare affordability is our and my number one priority. So I don't hesitate to say we're at a crisis. I think everyone on this committee knows that, an affordability crisis. And of course, insurance is a big piece of the financial puzzle. And that is an area that I have joined BISHCA back in the 2005, I believe, then BISHCA, as an analyst and examiner for Blue Cross Blue Shield of Vermont. And prior to that, I'd worked in public accounting and at the state auditor's office. So I just want to share that my career has been around money, following money, understanding what insights we can get by following the money. And I think healthcare, the state that we're in Vermont, when it comes to healthcare affordability and the markets, very much a great opportunity for folks with financial background to look into it. And obviously, many pieces to that puzzle, including all the health policy and delivery of care. But it certainly needs to be all hands on deck, particularly, as you know, when combined with housing, education, all the other challenges we're facing. So the charge in, no, just the report.
We have a report. online.
Yep, another report. Yep.
That's it.
So the portion of Act 68 where you asked us to provide a report was preserving the sustainability of domestic health insurers. We only have one domestic health insurer, that's Blue Cross Blue Shield of Vermont. And then, the plan, what's the plan to preserve their sustainability? And that may include reinsurance. So I'll touch upon those. I'll start with the blunt executive summary of how we preserve the sustainability and solvency of Blue Cross Blue Shield. And that is, we need to give them adequate rates. What's an adequate rate? It's a rate that covers the cost of claims, that covers their administrative costs, and where appropriate and necessary, contributes to their surplus. They have not received adequate rates for about 5 years now, in no small way. So that is certainly not the only cause of the financial challenges that Blue Cross had, that I believe everyone at this table is aware of, because I rejoined the state and DFR in April. So came in at the end of last session. Need to disclose that. So I kind of came in as some financial challenges, serious challenges of Blue Cross Blue Shield were kind of well on their way of being repaired, or, recovery was on its way by both the department, actions of the care board, actions of the legislature, et cetera. But an adequate rate needs to have, very generally speaking, what's in a dollar of premium? 90 cents goes to patient care, pharmacy, hospital, providers, all the things that we're used to our health insurance paying all or some of. The rest goes to surplus, contribution to surplus, reserves, money in the bank, a buffer, however you want to talk about it, and then administrative costs. When a company files, any company, not just our domestic, a rate request with the care board, all those components are in there, and a lot of detail, a lot of actuarial analysis, and an adequate rate, an adequate projection of claims will have a range, and that can be subject to actuarial judgment. A adequate or necessary contribution to surplus will have a range. That's also judgmental. How quickly do we need to get to a certain point? How appropriate is that? And I do not envy the Green Mountain Care Board for having to balance affordability with the solvency of a domestic, single state, nonprofit health insurer. Where we ended up was in a 5-year period, Blue Cross Blue Shield, and this information at times in the past or can be confidential, but the history with the financial challenges of Blue Cross Blue Shield, they themselves made public. So any numbers I give you were, are either public numbers or were made public by Blue Cross Blue Shield. But in a 5-year history of Blue Cross Blue Shield, their surplus, their reserves went from 135 million to less than 30 million in a short period of time. Most of those losses, about 120 million of losses, came from QHP, so exchange products, underpriced, and Medicare Advantage. You're all aware of where we ended up with Medicare Advantage. Blue Cross Blue Shield's contribution to that partnership is a good proxy for their losses, over $50 million, and about 70 again from the qualified health plan products. Part of that was rates reduced by the board in the name of affordability. Part of that was unanticipated claim surges. So even if the rates had been approved as filed during this time period, Blue Cross Blue Shield still would have lost money. They would have lost less, and they probably would not have ended up in the legally heightened authority and supervision that the department has when a company reaches a low surplus level. So it's a lot of talk about rates and adequacy of rates, but I do hope that that's a takeaway for the audience is affordability is critical. As I said, it's my number one priority as commissioner of this department. But what we can't do is in any sustainable way drive affordability by suppressing rates. There's a reality behind those rates. Again, 90 cents of those goes out to patient care. We receive them as card holders of whatever insurance you carry. But that approach, and I'm not saying it was an explicit approach, but regardless of the intent, it doesn't work. Unless you're just buying time. You've got this great plan that's going to save 300 million next year. What I was really encouraged to see coming back so I was at DFR in chief examiner and then deputy role when when the single payer effort happened, when the Green Mountain Care Board happened, when Bishka became DFR, and when rate authority went to the care board. What's refreshing after the early years we provide a solvency opinion to the care board. A critical part of that shift, of course, was wait, if you're taking away our authority to opine and approve rates, that's the way a company stays solvent. As I just said, adequate rates. That's most of the game. Insurance, investment income, those things for a nonprofit, not moving the needle much. We need to be able to opine and influence, prevent an insolvency because a party that doesn't have responsibility over the entity from a regulatory point of view now has responsibility from their greatest source of revenue. So every year in the Green Mountain Care Board process, we issue a solvency opinion that reviews the actuarial work of the filer, looks at the current financial status of the company, and does a little modeling in terms of, all right, if they didn't get this, what would happen, et cetera. Our solvency opinions for Blue Cross have always supported the filed rate, but with an understanding that any reduction in that rate needs to be actuarially justified. And then we emphasize the importance of that contribution to surplus. I'm going to pause there. I have no idea how many minutes I've eaten up on
No,
that.
you're just fine. This is good. It's a good kind of general introduction to the work you're doing. And obviously, we faced such a crisis last year with risk-based capital concerns, insolvency. And I know that you issued one of the things that we did, which is kind of, not well. People haven't thought about it much, was opening up the contractual discussions between our private insurers and the providers.
Yep.
Hospital. Those black boxes were always black boxes, and yet they very much influence the actuarial analysis
Yes.
and the rates. So now those black boxes can be opened up. And you also have the authority to do that. And so how will you be looking at the negotiated rates between the big hospital, for example, and Blue Cross and Blue Shield? Because that very much influences everyone's rates and how providers are reimbursed and so on. So a little bit about that. And I know you issued guidelines around some of this, so it'd be helpful.
Yeah, so two things on that. Yeah, absolutely. When I talk about adequacy of rates and 90 cents goes to, providers, a good portion, I think it was a graph in Emily's presentation just prior, a good portion of that 90 cents goes to our hospital and our hospital networks in Vermont. And that pricing, that reimbursement level is determined by a contract between the two parties. And those, of course, are proprietary and confidential. There's not one hospital or insurer that wouldn't love to see the other hospital or other insurer's contract. But we do get to see them, and we have asked for them. And we're very fortunate to have an attorney on staff who has a history in, and not with a Vermont insurer, no conflict, but has a history with health insurance contracting or provider contracting for a major 50-state health insurer. So getting some insight there. Knowing the importance, I mean, arguably, when we look at the cost of care coming from hospitals, we'd love to see a business-to-business solution to that, where an insurer negotiates more affordable rates on behalf of Vermonters, and also to provide stability and reduce volatility in their claims cost. It's worth emphasizing that for the fully insured book of business, which is the minority of the insurance world, or the healthcare world, by the way, when we also look at self-insured, et cetera, that insurance company is on the hook. If they collected $100, but your claims were $1,500, they're paying $1,500. And fortunately, they spread that over lots of people, so you don't get that systemically. But anyway, so the prices, the unit prices or the conditions of that contract drive the cost of claims to those providers. So we did two things. In August, we issued an order to actually both of the QHP participants, MVP and Blue Cross Blue Shield, and said, you will not execute a 2026 contract without first running a plan by DFR that shows how that contract will serve to sustain your solvency or profitability, but also advance affordability. I have no authority over hospitals, but I do have authority over insurance companies, particularly Blue Cross Blue Shield. And that was meant to put pressure on the insurers, but also to allow them to put pressure on the counterparties that we have a mandate from the insurance regulator that we can't keep doing what we're doing. It's not working for Vermonters. And I think everyone can agree that, or at least everyone in my department agrees. But
Better to have the pressure up front than at the end when it gets to the board.
yes.
Yes.
Yeah, not only that, or at the end when you find yourself in a financial crisis. So that was the one thing we did. And the other thing we did with that same order was appoint a DFR employed contractor with vast experience in value-based care contracting and provider negotiations. They work for us as a consultant, but they're embedded in the contract process with Blue Cross Blue Shield right now and really adding tremendous value to that process. You know, if nothing else, just from insight and kind of best practice perspective. And so, yeah, those are the 2 points on contracting.
Questions?
I don't know. To your point, I'm not sure what you were just alluding to there. You know, there had been issues identified with Blue Cross Blue Shield and some of their practices not being particularly diligent, that DFR had identified. I'm wondering if you're monitoring that
In terms of
situation?
In terms of contracting or in terms of just overall operations?
Administration and operation. I seem to recall something about interest having to be paid on claims incorrectly.
Yeah, I think, you know, we do monitor that. I don't have the details on that. That one does sound familiar from before my time. We can certainly get you more detail on that. Blue Cross is a single state insurer. They do have the support of the Blue Cross Blue Shield Association. Insurance insurance operations and IT, et cetera, very complex, as it is for large hospital networks as well. We did a claims, during this claim surge, as it's being referred to, that was really kind of pointed to as a big source of these losses that I discussed. Blue Cross hired, well, backing up, we put them under a level of supervision authorized by statute, required a recovery plan, which is authorized by statute. They provided that. We approved it. Part of that plan included us hiring a third-party expert in claims administration, processing, et cetera. The company themselves had done that as well. Somewhat different scopes. They were able to look at each other's work. What we found from that in terms of, you know, where the rubber meets the road and the losses, we were able to determine that the claim surge, the financial troubles Blue Cross found themselves in were not caused by any woefully deficient claims processing system or any claims review practices that were absent, you know, again, in any material sense. So if the question is geared towards, you know, is part of their financial issue that they're not doing a great job handling claims, not so much.
My real question actually was, AHS in their Rural Health Transformation Program application has a piece in there around exploring strategies to expand insurance options in Vermont.
Yep.
And also reinsurance.
Mhm.
And I'm wondering how DFR feels about the feasibility of that, or
Yep.
Whether you think that's a good use of funds.
Yeah, for reinsurance, there is potential there. The federal government's a big wild card, but we would need this. We would need. There's different. Reinsurance is a big topic. One of the things frequently talked about in health insurance is a waiver from CMS for a certain type of reinsurance that has some funding behind it. So
Question.
that pursuing a waiver of that sort requires legislation. Probably not a surprise, but you will see a request to authorize that so that if after study and understanding where CMS is at in terms of, what the options are, how it would impact our market, which will largely be a lot of work with DIVA, of course. We'd like to be ready. I think the administration would like to be ready to pursue a waiver. So getting authorization this session, I think should be on the table.
Was that in your report or was it in the AHS report? There was
Might have
a
been both.
comprehensive discussion on reinsurance and it looked like you were going to be proposing.
Yeah, section 30,
Yeah, I thought-
32 reinsurance is mentioned in here. We did not give you a comprehensive
No.
discussion of reinsurance.
Yeah.
You don't. Trust me. But, I do think, in terms of additional insurance options, I think one thing I do, and this is not what's meant in terms of the rural grant, as far as I know, but there are these ideas that if only we had a competitive insurance market, if we had more insurers playing in the market, I don't see that. Again, I follow the money. The cost of care, the cost of patient care in this state, which is a combination of the cost of the service multiplied by the usage, right? Utilization and the contracted rates. That's where we need to focus as a state. Bringing in another insurer, they're just going to look at the cost of care in this state and come up with the same price. Maybe it's 10% less for the first year, like when a new company comes into a market and tries to buy some business. But
And divides the risk pool.
Yeah.
yes, great point.
Completely and totally. I mean, the smaller, the more of these things that we have, all these different programs, the more expensive it's going to get for Vermonters.
I asked the question mainly because we hear from constituents that Vermont's problem is that we don't have competition in the insurance market. And, my response is nobody's coming here.
Yeah, right. And even if they did, absolutely true about concerns dividing the fully insured risk pool, but also they have to, the idea that three of our bigger players, Cigna, MVP, and Blue Cross, that with that market force, of course, they don't work together, but even the competition between them, the fact that hasn't, through negotiations, contracting, driven prices to a more reasonable level, adding a fourth or a fifth, now they have even less market share to convince the provider to take their lower deal. I just don't see it as a solution, given where we are right now.
Not enough of this.
Right, yes.
That's the issue. Thank you.
Yeah, hopefully that was responsive. Yeah. And then reinsurance outside of a funded reinsurance program. The one caution I give on, which is the 1332 that has the potential for funding and true kind of optimizing things. Outside of that, reinsurance in the insurance world is just laying off some risk, an insurer getting insurance, and they got to pay for that. And with the volatility of claims in Vermont over the last several years, there's no savings to Vermonters to be had by commercial reinsurance.
When I ask one,
No, I'm all set.
you have a question? Well, go ahead.
Just in the conclusion, you talked about further steps are needed to ensure solvency. And it seems like you talked about some of those that you're taking. I just want to make sure, other than this waiver, there's nothing else that you see as steps that the legislature needs to take.
We do have a package of bills, with Ledge Council or proposals that we'll be discussing later. I'd say none of them are earth shattering, but we think they'll help move the needle. Again, insurance is a piece of a larger puzzle, a much larger puzzle. And, the way it works in Vermont, it's really become a payer, we refer to them as payers. And, $1.10 in and $1 out to patients. And again, it gets back to adequacy of rate. That is my plan. I need to ensure that, for the purpose of the charge of the report, but also my charge as a regulator, I need to ensure the solvency of our only domestic health insurer. And to give a review of what happens when they're on the brink, that they had to recapture to get out of the hole. I think we have a 7% contribution to reserve in the rate that's in the market right now. Is that correct in terms of what was approved in 2024 for the 2025 QHP? I think the troubles happened soon enough that the board and all hands were on deck. So if rates aren't adequate in 1 year, there's a lot of parallels to one-time funding in the discussions you have. It gets you out of the crisis in front of you, but it comes back.
So just one question that maybe you don't fully answer because it's really a procedural type question, that you were talking about how things happen with the department and between the department and insurer, in particular Blue Cross and Blue Shield. And recently we had an announcement that appeared to be abrupt for some of the mental health folks, those who are still gaining their hours.
Yeah.
And that rate reduction came as a real surprise and shock. So what process do you have in place in your work with Blue Cross and Blue Shield in this case that would ameliorate that shock effect and have that discussion happen before we're going to reduce your rate by 24% or whatever it is? Is there anything there? This could be a broader discussion, but I guess.
No, it's a fair question. And I would put that in the category of, it's not explicitly in my regulatory authority. It's a behavioral thing. It's a reputational thing, but we have talked to the company about that and other decisions and the importance of maintaining, thinking those things through. So I understand the blowback from that. I also understand that, and again, I'm not the health policy expert or the, where the dollars would be best spent, whether it's, or best cut, but I do have a broad concern that, how you deliver a message is critical. But at the end of the day, I think if Vermont is not going to have $50,000 family QHP plans unsubsidized, something's got to give on the benefit side or the cost of providing care side. And, perhaps what you've seen there is a stumble in the messaging or even in the message or the decision. But at the end of the day, I think from my point of view, absent that event you're talking about, I feel as a consumer, as a person in Vermont with health insurance, ready to see what happens and ready to accept that there's going to have to be some reduction in.
That is exactly true. And I think we're all now becoming very aware of that. The final decision around subsidies for QHPs has not been finalized. But even in anticipation, saying we're going to cut rates, to me, seemed a little bit categorical. And so I'm glad that you're aware of it as a regulator, and really appreciate the work that you're doing, honestly. But it is a concern when the legislature and others have decided that mental health, for example, is a priority.
Right.
And supporting this workforce is a priority. And then to have that be sort of missing the target, this is not you. I'm saying something that I hope others will also hear. So,
I receive.
that could be a problem.
Yeah, no, I have people in my life that were affected by that announcement, as we all did. So I received 2 texts that evening asking for insight. What does this mean? How could they? That type of thing. And yeah, from again, I don't want to call it the softer side of regulation, but the qualitative side as opposed to the quantitative side is discussions with the leadership and making sure that they understand how announcements like that or decisions like that impact their own reputation and ability to have the support of Vermonters, which we desperately need to all be paddling in the same direction here. Hospitals, insurers, regulators, and legislature.
Yeah, no, thank you for that. And I think we all feel the same way. We've really valued Blue Cross and Blue Shield. We don't want to lose them. At the same time, we want to make sure that we're all in the same sphere, cultural sphere.
I think it points to a larger issue though for us and, as legislators, how will these decisions get made as we're moving forward? And it's not just in commercial insurance, our state's Medicaid program is making similar decisions. They just made a decision around therapy for people with autism, and that's having another dramatic ripple effect. And, I think it's important for us to be able to communicate kind of like what's the thought process that has gone into this? What are the whys besides our needing to control healthcare costs? What, are there
Where are the priorities?
what are the priorities? I mean, we know early intervention for kids with disabilities reduces their need for services later in life, particularly kids with autism. So it's confusing sometimes to those, and not just us, but the people who are directly impacted. So, I would like to see us have something a little bit more transparent to the people. Yeah,
That's why I brought it up.
yeah.
Nolan Langwell, Friends.
For the record, no language director's club. So I just want to let people know that I have an issue brief on this subject about solvency and Blue Cross Blue Shield and what the potential implications might be. And I'm going to hopefully release it in the next couple of days, if not by early next week.
Why don't we have that posted today? Source
So I will have, it's not ready, so it's going to be ready.
I missed that part. But it's ready. We'll get it. We'll post it up on all our committee. All right.
If I may, just on that point and the earlier point, we see this in a lot of our current crises at the state where people are making decisions under duress because we've failed to get ahead of it. And nobody likes to talk about rationing of education or rationing of healthcare or rationing of anything, but it's happening under duress because of lack of money and, stress at the individual household level. People are making horrific decisions to take the risk themselves. So again, preaching to the choir, but this is why I shared with you, this is the number one priority. Anything I can do for any of you, any questions you have.
Sarsha, we went off.
Well, we did this live on there.
Oh, okay, sorry.
It's because I was pontificating. Get them out of here.
Maybe somebody's sitting there.
Oh, sorry.
Cables or something.
Go ahead.
Well, that was it. Just that, and this comes from a good insight in talking to Joe Valenti, who I introduced earlier, is that we're at this point in this state, whether it's housing, education, or healthcare, where we want to do the right thing, but things are happening while we're planning, and
We want to do it right away. We all feel that way. We want to see results instantaneously. Very difficult. All right. Thank you for your time.
thank you.
I'm sure we'll be seeing more of you.
Yes.
So we're going to move on to Addie Strumolo, who is here, and then Mike Fisher. Just briefly look at the open enrollment update information that you have. Appreciate your being here.
Thank you for having me. I'm going to attempt to share my screen. Exceeded. Okay, let me see. Good? Great. Thank you. Hi, for the record, I'm Addie Strumolo. I'm the Deputy Commissioner at the Department of Vermont Health Access. It's really nice to see you all. Thanks for having me this morning. Or afternoon, I guess, we're just afternoon. So I'm here to give kind of a brief overview of our current open enrollment period. Just by way of agenda, I was going to talk about kind of the operations and logistics of open enrollment first, where we are in the process, then talk about the unique affordability challenges that we are facing this open enrollment period, and then kind of what we're doing to support Vermonters through them, and particularly around the fact that there are still subsidies available, even if we don't have the enhanced subsidies that were mentioned earlier. So just kind of orienting us in what we're talking about with open enrollment. This is open enrollment for Vermont's health insurance marketplace, so the qualified health plan marketplace that has been discussed elsewhere this morning. These enrollment numbers are based on 2025 going into this open enrollment period, but we have just under 33,000 Vermonters enrolled currently. The vast majority of them receive financial assistance, both state and federal, in paying for their qualified health plan premiums. So it's not a huge part of the population, but it fills a really critical gap for people who don't have access to Medicaid, Medicare, or employer-sponsored coverage. So this is our overall timeline for open enrollment. As you can see, preparation starts in the summer, and I'll talk a little bit about how we started preparation even earlier this year because of the challenges around affordability. But some key milestones, open enrollment goes live on November 1st. That happened as scheduled. And we are now approaching a very key deadline of December 15th, which is the deadline to get January 1st coverage or make changes to your coverage that would be in effect for January 1st. Open enrollment itself runs all the way through January 15th, but if you roll after December 15th, your coverage will start on February 1st. I'll just make a quick note that this is how it's been for several years. Next year, we're going to have to condense the open enrollment period under federal rules. So it will probably just run until December 15th. That's just a preview for next year.
They're trying to make it consistent with Medicare or what?
They just want it to be shorter.
What are the dates for next year?
Next year it will be most likely November 1st to December 15th, and that will be the final.
Isn't that what it was this year?
This year, there's an extra month.
There's an extra month. We don't start until.
So as has been mentioned, and I've said this a few times, we're kind of expecting this year's open enrollment to be one of the hardest that we've ever had, which is saying a lot. The primary reason for that is that we're facing the expiration of the enhanced premium tax credits. I know this committee and you all know a lot about this, but I'll just spend a minute on it, actually on the next slide. But I also wanted to highlight that there are several other changes due to federal policy that have impacted this year's open enrollment period. These primarily relate to limiting eligibility for certain immigrant populations. So we have the Deferred Action for Childhood Arrivals, DACA recipients who are no longer eligible under federal law. And then there's a limitation on financial assistance for people who are not eligible for Medicaid based on their immigration status and who are at a low income level of under 100% of their federal poverty level. These changes don't affect a lot of Vermonters by the numbers, but they're almost a foreshadowing of what's coming next year when we implement other changes under the Federal Reconciliation Act, known as HR 1, to do with limiting eligibility for non-citizens generally.
Do you have the numbers for those, DACA?
For these, it's about 50 in total.
Total of 50 people.
Yeah, and that's just based on the outreach that we had to do to the anticipated population. It's possible that people's circumstances could have changed to retain coverage, but we outreached around 50
people or household
people.
Do we have any idea yet how many of these people will be automatically covered under IHIP and how much that's going to cost general fund?
That's a good question. I think the short answer is no, we don't. And, you know, if you're talking about this particular population, as said, it's somewhat small, and it would be the subpopulation that's a child, very unlikely to be a child or a pregnant individual. But as we get into the changes for next year, which we can spend a whole session on, that'll be a key feature is figuring out who can transition over to IHEP from Medicaid.
So your second here, no financial assistance. So they're already, it's my understanding that there are certain immigration statuses that currently are eligible for Medicaid, which will be gone January 1st of this year.
No, the statuses are changing for next October.
Okay, all right.
So this is a separate issue. No, it's, but it's a I'm the one who conflated it because it's kind of just a precursor of what's coming. Yeah, for Medicaid, it's next October, and for the marketplace, same changes for premium assistance would be January 1st of 2027. So going back to kind of the key challenge, again, the federal enhanced premium tax credits have been in place. They were put in place under the American Rescue Plan Act back in 2021. These enhanced the premium assistance that were already available under the Affordable Care Act by making it available to more people and making those who are already eligible eligible for more. So this is what is expiring at the end of 2025. And kind of the upshot, our talking point around this is that the average monthly net premium for all qualified health plan enrollees will double. A few weeks ago, I would have been talking to you a lot about contingency planning and, kind of hoping for the possibility of an extension. It's really looking unlikely at this point, at least getting something in time for January 1st. So we really shifted focus. We will, of course, react if something happens, but shifted focus to just supporting Vermonters through this change in hopes of their retaining coverage. So how are we doing this? Obviously, focusing a lot on outreach and enrollment support. We have kind of a public campaign, stay informed, stay covered. As I mentioned before, we started our open enrollment outreach much earlier this year, sending postcards to enrollees about the fact that costs are likely to go up because of, at that time, it was inaction from Congress. And just doing more direct notices to impacted members, making sure our informational website is up to date, making sure the plan comparison tool, which is the feature that you can use to shop among plans before even logging into the exchange portal, was up to date early, and then making sure that our robust assister community was well informed and able to help people with their plan selection choices. Tried to keep the messaging simple. It's obviously a really difficult message, and it was very, very difficult when there was kind of a layer of uncertainty around whether the subsidies would kind of come back. But these are kind of the key points that we've been reiterating in the lead up to open enrollment. This is also the kind of set of examples we've been using as we've been trying to lean into the fact that even though many people are losing subsidies or losing some subsidies, many are still eligible, just not for as much. So where the low, something like 92% were eligible with the enhanced subsidies, it's going to come down to something like 75% going forward. And I'll share some metrics around that. But do want to highlight that we have a very robust subsidy structure here in Vermont with our state subsidies and some different ways that we do rating called silver loading that I will not get into the mechanics of. But there is money to be had here and assistance to be gained. Current trends for open enrollment, we saw right off the bat that people were kind of hearing this review your options message and engaging in shopping activity, which is quite promising. Our plan comparison tool usage kind of skyrocketed when it launched. Call volume coming into the call center also increased significantly, and activity in the portal where people do their actual plan selection work has been much higher consistently compared to this time last year. And I think overall we're encouraged that people are engaging with the system, even though they're having to make difficult choices. In terms of enrollment itself, to date, it has actually been somewhat steady. We've seen both new applications and disenrollments, but we're still holding steady at our roughly 32,000 number. The percent receiving, as I mentioned earlier, premium assistance has decreased as expected. And what we're seeing in terms of plan selection is a lot of buying down. So people who may have been in the gold plan looking to move down into a bronze plan. And I think, you know, the outcome of the challenge is kind of yet to come because the invoices from the issuers will be coming out shortly. That's when people will really see the hit on their premiums. And we will plan to report out, you know, concretely on what we're seeing in terms of attrition and the plan selection migration as we get toward the end of open enrollment.
So the question on this, your top line there, 32,000 with new applications and disenrollments. Disenrollment means they're not gonna be having health insurance? Or they're just on, is that, so of the 32,000, how does that break out between new applications and disenrollments?
I don't have those figures yet. That's part of what we'll put together in kind of an overview dashboard, but it includes several different things, both new applications, full disenrollments. It could also include people transitioning to Medicaid. Maybe they had a circumstance, a change in circumstance or income. So we'll break that out once we have kind of more final data. Mhm. And that's, I think it, we just wanted to, happy to take questions, but I think in terms of next steps, really focused on supporting Vermonters through this and through the upcoming plan selection deadlines. Like I said, we'll be monitoring our data and reporting out on that and standing ready to react to any federal changes, although I think we see that as pretty unlikely, at least in the near term. So very happy to take questions.
Thank you.
I'm going to show my ignorance here, but I have only served in the legislature under enhanced premium tax credits.
Sure.
So Vermont has always had additional credits for that 138 to 400%. With the enhanced federal credits, we were not paying in as much. It's my understanding that there wasn't as much of a need to use the Vermont. That will be going back. Do we have any idea what financially that will cost us?
Yeah, that's a really good question and one that I don't have the figures for. Whoops, sorry about that. But yeah, in essence, with the enhanced federal tax credits, maybe I can just stop sharing. There were more people who were eligible for almost fully subsidized coverage, which meant there was nothing for the Vermont premium assistance to kind of fill in the gap for. So we had a big reduction in kind of utilization of Vermont premium assistance. And we're projecting that to go back up. That will be part of all of the budget conversations that we start to have this month. I don't know the exact figures. I would guess it's in the like 5 to 6 million range.
Who's next?
I had a question that went out of my head. Oh, yeah, no, that was, you were talking about helping people through the process. So another thing that we're hearing from our community partners is that they're also seeing, you know, some of these same people in their organizations. And I'm just wondering, when you say helping people through the process, does that include any sort of, I guess, I would say additional outreach via those community partners? You know, like community action agencies, which I know probably maybe more typically on the Medicaid side, but they also serve some of these other more other households. I'm just wondering if it's all state staff and, you know, state contracted staff doing this sort of helping people through the process.
Thanks for the question. We, I think our primary in terms of interfacing interpersonally with Vermonters is our sister program, which is not just state staff. That's a lot of people in provider offices, other types of nonprofits who are trained by us, but independent of the state. And then we do a lot of work. We have kind of a partner listserv to which we send a lot of information. I don't know specifically about the specific organizations that you're talking about, but that's kind of the way that we do that.
Okay.
Yeah.
Thank you.
Okay, other questions? Thank you. This has been very helpful. And we'll look forward to, well, we don't look forward to.
Because you hear it. That's also.
Thank you, Abby.
Thank you very much.
So we'll move on to Mike Fisher.
Good afternoon.
Good afternoon.
Mike Fisher, healthcare advocate. Thanks for having me here at the end of your day. This seems to be a pattern. I get to sweep. I think I will spend just a moment on open enrollment and then, well, let me just launch in. We also at the Healthcare Advocates Office have a similar dynamics to report. We don't have the same numbers that Diva just reported, but we can also reflect that there is a lot of interest, a lot of activity. Vermonters are hearing that things are in flux, and that's great. It's a lot of stress on the systems that serve those people. There's a lot of stress on those families. But we are not experiencing what in a usual year, there's sort of a flow of people right at the beginning, and then things trickle off a little bit until the deadline, and it's a little bit more steady this year. And coupled with that, in a regular year, we wouldn't have so much upheaval in the Medicare Part C market because we serve all Vermonters at the Healthcare Advocates Office. We are also swamped by that population. And also would reflect something that Addie just said. We do see a pattern of people moving to lower value plans, sort of not surprising. Their bills are going up and they're trying to figure out how they can manage those bills. And so they, no surprise. I want to remind us that the last time we did the household health insurance survey, we had an underinsured rate of I think it was 44%. And this is maybe 4 years ago. Last year, when we did the household health insurance survey, the underinsurance rate was 31%. We made up some ground. We were doing better. That is, people were buying plans that had cost sharing that was a lower percent of their income. And I predict when we next do the household health insurance survey, I'm always an advocate of doing it more often. We should do it because it's our way of knowing what's going on out there. That we'll see more people who are purchasing health insurance plans that they can't afford to use. Horrible way of saying it. They're spending money on premiums, but they can't afford to go to the doc because they can't afford the copays. So that's the dynamic we see playing out. And I also want to, Addie did say it, but I do understand that the invoices, the bills from the carriers for January payments have just gone out. They're landing in Vermonters' mailboxes, today, tomorrow, early next week. And so we expect another flurry. This is the wake-up call. This is when people say, yeah, I hear this chatter on the radio or in the news, but I don't know how it's going to affect me. And suddenly they go, wow, that's how it's going to affect me. So we expect another surge of people waking up.
Can I ask you a question? So the 32,000 people who've been getting the enhanced premium rate, I probably should have asked this of Abby. It's like, what proportion of those folks won't be eligible for state assistance through the state?
I think the estimate I have heard, and Addie will correct me, of the number of people who are above 400% of poverty, so are losing all subsidy, any subsidy, is 600 some.
I think it's 6,000.
6,000.
Yeah.
Thank you. 6,000 some. At the sixth part, right? And just to link it, I think everybody here today was at yesterday's presentation. The example you just gave is the Oscar and Willa story I told yesterday, the family that's losing $25,000 of subsidy. That's that example. And I just want to piggyback on that. I want to say a sentence or two more about each of the stories I told yesterday, and I'll start with that one. I didn't say yesterday another option that family has would be to reduce their countable income. So the example I gave yesterday, well, now I don't have it in front of me. I think it was $132,000 of income for a family of four. And my quick math is that they would have to reduce their income by $7,200 to get under 400% of poverty. That is a hard thing to ask a family to do. It's especially a family that's, at that income level.
Come out ahead if it did.
But that is a calculation that they can make and,
But if it would cost them to use their health insurance, like you said, they might be paying for the health insurance and then never use it because then they got all the other co-pays.
Angry.
this is the kind of, this family has a lot of bad options.
Yeah.
And so, but it is one of the bad options that, depending on their predicted healthcare needs, predictable healthcare needs such as it is, they might make. The first story I told was Veronica, and that fit the category of the under 100% of poverty person who's legally residing, who in 25 they're allowed to get premium tax credits, in 26 due to HR1 are not allowed to. It's good to hear that update that we think that that's around 50 individuals. Nolan asked me yesterday not to offer suggestions, but he didn't ask me.
That was for yesterday.
That was for yesterday.
Hang on for today.
I just can't help but say 50 people is a small enough set of people, and we should entertain the next set of people who are also affected in both Medicaid and the exchange. And so I think it's worth it to have a policy discussion about whether IHIP could possibly support those people.
Do we know what the cost of that, do we know would be?
That would take some,
Okay.
yes, we don't know the cost of that. And then the last story I told was Betty and Hal. Betty and Hal were also just barely above the cutoff for supports. But in the world of Medicare and the way income is counted, they don't have any opportunities to reduce their countable income. They're on fixed income. They can't do the kind of activities that you can do in a modified adjusted gross income. And so I guess I just want to remind, there's another opportunity for us as policy in this policy discussion. Last year, you increased the Quimby level from 145% of the federal poverty level to 150% of the federal poverty level. That has, my recollection is that was about $400,000 in state dollars for the half year. So it cost, I think, about $800,000 to make that change. And that is a place where, our state dollars are more and more precious right now, and we should be looking for places to invest those state dollars where they have a lot of bang for the buck. And I just can't think of another area that has as much bang for the buck as the MSP program, because it opens those people up to fully federally funded programs. So it's not just the Medicaid match. It also gives them access to programs that are fully federally paid for. So the example of Betty and Hal, I think it warrants yet another policy discussion about whether there's anything we can do to bring those people under the tent of support. It's late in the day, and I would keep going for a minute if you'll have me.
You've got 4 minutes. It would be fine.
I guess I think two things. One of them is I just want to recognize, in all of our discussion about health insurance affordability today, we barely mentioned the small group. Green Mountain Care Board mentioned the small group when they were talking about the rates. Other than that, pretty much all the conversation has been about the individual group, and that for good reason. The individual group needs a lot of attention, but man, the small group's in trouble.
Oh, they're out there.
And
Yes.
And I'll just make the statement some of you have heard me say before. I believe we're cannibalizing the small group. I believe that we're allowing for a segmentation of the small group that is leading to higher and higher costs for those who remain in the small group, and fewer and fewer people in it. Fewer and fewer sicker, more expensive people in it. And there are things we can do in our stop loss regulation and the regulation we do around self-insurance. And that is a comment that is really directed at DFR. That decision lives at DFR. I just don't want to miss it. Any suggestion about further segmenting the group by allowing for people to join into sort of special little pools to get better rates, it's just going to make it worse, in my opinion. We need to figure out ways to hold it together.
Make it bigger.
Yeah. With the recognition that, we have the pool that we have, I think Kai Simpson said it well. We have the pool that we have, and bringing in more parties don't necessarily help. Then the last thing I want to say is I sit here and I listen to the administration talk about the transformation effort and the work that they're doing, and the board talk about the rates that they were able to achieve, and DFR talk about adequate rates, how important adequate rates are. And I'm left with this, like how do I put it all together? And with a real concern that we're not reflecting the timing pressure, the urgency timing pressure that we're under. Do we have the time to allow a transformation process to play out over a number of years? Or is the financial pressures that are landing today on our payers, that means taxpayers and ratepayers, going to, does that necessitate moving faster? And so I'm just left with a struggle, because I get it. Transformation with hospitals takes time and should be given time. And I am very much afraid that the market, the financial pressures is going to deliver a blow faster than that process, and just create more instability in our providers.
Well, you've got us right here in the middle. We've got all those tensions pulling at us, and you're absolutely right. That and the federal government being people in a way that we would like.
Yeah.
Thank you for your comments. Appreciate them very much. Our stress hormone just did go up. So
My job.
thank you very much.
Thank you.
With that, folks, I think we've been through a lot today, and we're going to call it a